Muito obrigado a todos. Eu sou carioca, flamenguista, sofredor, aqui como alguns dos meus amigos. Infelizmente, eu tenho uma dislexia, eu estou há muito tempo nos Estados Unidos e eu vou ficar aqui falando como é que eu digo isso em português. Então, se vocês me permitirem, eu vou fazer essa apresentação em inglês, que vai ficar mais fácil. Espero que tem tradução simultânea? Tem? Oh, maravilha. Então, my name is where's the clicker? Here. Fantastic. My name is Alex Nascimento, and this is what I do. I founded the UCLA Blockchain Lab. I wrote this book here on security tokens, which I'm going to share with you guys so you all can download it. On my day job, I run an investment firm on blockchains, and I'm extremely honored to speak about my book after Gustavo Franco. Certainly, his book's a lot better than mine. But this will teach you guys without technical knowledge on this technology called security tokens. Clicker. Okay, so natural disclaimer, I'm not a lawyer, and for all of you, get a good lawyer, right? There's a bunch of guys here that are fantastic lawyers, can help you a lot more than I can do. So this is just my opinion. Oops. Here we go. So what brought us here, right? The fact that blockchain is a technology that provides this encrypted file, that you cannot double spend it, allows me to give you a certain paper money, like Gustavo was saying, that's valued at whatever I say so. That technically can be valued by a third party or just valued by an issuer. So in this nice little gimmick here, you can only have one Mona Lisa. You cannot have a copy. That brought us to sometime in 2015-16 when Ethereum created this smart contract, which is actually not that new. It's been around by Nick Zabos for a couple of decades. But essentially it pairs like two players, a buyer and a seller, and it bypasses the middleman, right? You can sell and buy a house by just connecting it directly to a registry. So you could do this with stock companies, derivatives, loans, any other thing that today require a middleman. But then the SEC, talking about regulators, said, whoa, not fun. Let's put a stop to this because this is actually not complying with securities law in the US. So the SEC in 2017 kind of created this dividing of waters between what is a utility token and what is a security token. And I tell my students this, right? A utility token is just like an access token. If you guys are old enough as I am, you will remember Disney dollars. You bought a Disney dollar, went to Disney, you paid for a ride, paid for some ice cream, went home, nothing changed. A security token is actually just like Disney stock. You're actually buying an investment contract into the Disney Corporation. So if we look at the definition of a security by the SEC, it's essentially an investment contract, right? That can be an ownership in a corporation, rights to an option to buy something in the future, a derivative, or a loan, such as a bond. So then the security tokens started appearing around. And you might ask, why is this guy talking about security token when everybody was talking about ICOs? So I've been in the space for like 4 or 5 years, more or less. And a lot of people told me, like, well, let's do an ICO. You know, a lot of people are raising a lot of money for startup projects. I have a great startup project. And I looked at that and I said, well, this is clearly a breach of US securities law. And as you guys might know, in the US, they love poster childs. Right? So I would see myself in the cover of the LA Times saying, UCLA professor goes to jail for breaching securities law. So I decided to study this stuff. And that's how I got here into defining that security tokens are a representation of value on the blockchain, which you can represent anything you technically want, any kind of investment contract. Now, for the SEC, if you guys can see on the bottom there, it's actually everything is considered a security token. So I'm doing good on time. Here we go. What can we do on security tokens? We can tokenize a house. So a nice apartment here on Avenida Virasoto can be shared by all of us in here, and we can all capitalize on that. We can tokenize startups, which were the bedrock of what happened in the ICO world. We can certainly tokenize mature companies, like a bunch of restaurants or small, medium enterprise companies that are in need of cash. Certainly do energy. You can transform watts into tokens. Arts, units of art. So if you can't own a Gêmeos or any other of a Tarsila do Amaral, maybe we can share that as well. And in the financial industry, it started a lot with funds and VC funds, which were really popular in California and Los Angeles. This is what I find to be a little bit of one of the key slides of this market. So what are we seeing today, right? We're seeing a replica of what already happens in traditional markets in the security token ecosystem. You basically need these 6 blocks to operate. Problem is that these 6 blocks are not talking to each other as of today. But give it like a year or so, we'll see a lot of advancements. So you need people that will do the custody and trust so that you as an investor can feel safe that your crypto assets are being held also by a third party. You need an issuance platform like Securitize or Polymath or any other of these guys that are in the market. You need a broker-dealer who needs the necessary licenses to be able to sell a security, especially in the United States. You need legal services, and trust me, that's a key important factor there. Fisher & Broyles, DLA Piper, very famous for operating in the space. And you need trading platforms to trade these different securities. In the US now, we have T0, Open Finance, SharePost. There's the Gibraltar Stock Exchange. There's the SIX exchange now coming out of Switzerland. There's a lot of things being done there, as well as you need compliance, which are now can be done by Verify Investor, NetKey, and a bunch of other providers who will tell you that your investor and your buyer of a security token is actually someone who passed KYC and AML requirements. Some of the benefits we see on security tokens, obviously we've been talking about this a lot here, is faster settlement and compliance. We can do automated revenue share. I kid you not, people get shocked when I tell that in the United States, one of the largest, obviously the largest, but market of equities in the world, there's only 3,000 companies that pay dividends. That's shocking, right? Why? Because it requires so much paperwork to do that. But with security tokens, you can automate that. You can do startups fundraising. So if you have an idea of a startup, you can issue a security token technically. Security tokens have much lower risk of redemption, advantages of secondary liquidity. You can sell it on the secondary market. Apparently a 24/7 market that doesn't stop. And obviously a facility to transfer ownership and track that ownership. This is what we're seeing now in the world. Like we see different options of security tokens. Bitcoin and Ethereum was deemed by the SEC as a commodity. I can tell you offline my opinions of what that was, but not on camera. In Japan, we see that as currency of law. In Hong Kong as commodities, and in Europe as country specific. But if you question yourself, what is the most prominent market today to issue a security token? It's certainly Singapore, where they span across altcoins, stable coins, and pegged coins into securities law. And if you go to Singapore, it's actually not that difficult to open a company and start working on your security token. Here's a little bit, as I still have a little bit more time, of what brought us to this stage where everything in the US is a security token, aside from Bitcoin and Ethereum. You're actually looking at July 2017, which the Dow scandal brought the SEC to say, whoa, now everything here is a security token. No more ICOs. Can't jip investors, right? Then we had the Munchie test in later 2017. The Paragon and the Airsoft coins, which actually were deemed securities, paid a lot of money to the SEC, and now are issuing securities. Then to Turnkey Jet, which was one of the first ones which were issued to be a security on the blockchain, and recently the Kick scandal, which was $100 million in securities. So this brings the SEC to look at this and say, wait a minute, now everyone here needs to follow regulations. Oops. And these are the regulations. People talk about the United States being really hard on regulations, but actually, I would say it's one of the most friendly environments to do a security token because you can follow these three prongs and actually issue one. I'll go really briefly over what it is, but you got regulation crowdfunding, or Reg CF, which allows you to raise about $1,070,000 from the general public, from your friends, family, people on Facebook, if you can get to post something about crypto on Facebook these days. Then you can move on as you get a little bit more money and do Regulation D, which is a private offering of a security to accredited investors. Accredited investors in the United States is anybody that has over $1 million in liquid assets or makes over $200,000, $300,000, depending on your tax structure. You can also advertise it, right? But then recently, and this, when I say recently, is super recently because it was on July 10th of this year, the United States issued 2 Reg A pluses that are on the blockchain. So essentially opening the doors for US companies to issue security tokens on the blockchain. This was not seen before, but Blockstack and our friends from PropCoins issued 2 Reg A pluses on July 10th. If you ask me like how much it costs, give it around like $2 to $5 million for the first 2 ones. I foresee that to significantly decrease as services and legal fees and legal templates became more prominent around the space, but that's the word on the street on how much these 2 first one cost. So why is this, right? So some of the problems and the opportunities about security tokens. If you talk about the problems, still lack of liquidity. You go on T0, you go on Open Finance, you go on some of these security tokens exchanges, the trading volume is still small. There's a lot of unclear regulation and interoperability among tokens, and the token standard that everybody operates is still unclear. But what are the big opportunities? If you look at the US operates 39% of a $70 trillion equities market and 42% of a $92 trillion bond market. We have about 4.1 billion internet users in the world. If you open this to everyone that has access to an internet, imagine how much more liquidity and cash flowing around startups and companies you could potentially achieve. If you don't believe me, I would suggest following the news. Here are some of the latest news on NASDAQ, Forbes, even in Israel, we're seeing this happening, where companies are doing this regulated security token offerings. And if you guys watch Game of Thrones and they say winter is coming, I have something new for you. Institutional money is coming, right? And we have our friends here from BTG who have been trailblazers in the space, but this is only this year. So Morgan Creek is a Virginia fund that already has $40 million in venture in crypto. JP Morgan created their JP Morgan coin. Cambridge Associates is recommending people to buy crypto. Swiss investment bank Julius Baer is now saying, hey, we're crypto friendly. Fidelity is onboarding clients. There's the word on the street that on their dark pool, they operate over $150 million a day. And the CME, the Chicago Mercantile Exchange, the futures of Bitcoin, has now surpassed daily trades of Bitcoin. So people are betting on the future more than people are trading it today. Here are some of like the case studies that we look at UCLA on IBM and Microsoft working with R3 and other cloud-based services to operate stock exchanges and banks in Japan that are utilizing this technology to issue security tokens or again investment contracts on the blockchain. And if you to ask me what the future is like, I'm going to give a prediction for the following 12 months. One is regulation. Regulation is paramount. Completely agree that this libertarian blah, blah, blah is not going to fly, right? Or people are going to go to jail. There's a good choice. Security tokens are going to be the standard for new IPOs. And we see atomic swaps, early options of atomic swaps like ERC 1404, which is a simple restricted token standard being offered, which complies with governance, banking, and securities law, all in a smart contract. I don't have time to go through this, but the point here is a lot of countries are on this bandwagon, right? Including Brazil, we got the United States, we got Canada, which has a very friendly jurisdiction. We have Bermuda. We're actually talking with the local regulators in Bermuda to help them craft their bill, which is their digital asset regulated exchange bill. European Union is looking this at a country-by-country based. Liechtenstein has a very open jurisdiction that is onboarding a variety of different foreign companies. In France, you can issue security tokens as long as they're not traded in secondary markets or registered. Estonia has an impressive history of using blockchain not only for IDs, but also for security tokens. Gibraltar is going and moving forward with security token exchange. Switzerland, likewise. Malta is one of the hottest beds in the world for security tokens and digital asset innovation. Australia, equally friendly. China, I would double think myself into doing anything in crypto in China, unless you want significant problems with the country. But Malaysia, significantly open. Hong Kong as well. Japan, we had a few examples here of how Japan has deemed crypto as a currency. The Philippines is actually leapfrogging a lot of other countries, but offering a security digital exchange licenses. Singapore, like I mentioned, one of the most prolific countries in the space. South Korea has some regulations on crypto exchanges. And we're looking at countries like Thailand, really at the forefront of this. Saudi Arabia and the Emirates using security tokens to do payments and transactions between the two nations. And even Mauritius utilizing this new opportunity to bring funding into their country to leapfrog their economy. As I got to the end of this presentation, I would like to leave you guys with an old saying in the technology world, which is Amaro's Law, right? Which state that we tend to overestimate the effects of such technology like blockchain in the short run, but really underestimate it in the long run. So if you have a long view on this, this is the next generation of financial inclusion. If you want to download the book, we created a security code here for you to download it for free to celebrate Blockchain Week Brazil. Please feel free to download, leave a comment. We're donating this book to 50 universities. Our idea is really to educate people and demystify what blockchain is and what security tokens are for the executive or student of economics, finance, so forth. You don't need a technical background to read this. And as my last, how did it go to the last one? Here is my last piece of advice. If you're going to go into the space, I would significantly be careful about your reporting obligations so that you implement the necessary tracking to make sure who's holding your tokens. And if you have any kind of cash, first thing I would do is hire a lawyer. And with that, I would like to thank you all. Feel free to send me an email. It was a pleasure to be here.